I think the general consensus is that sellers need to accept this new reality as well, and that there's going to be a pretty broad haircut in value across a lot of assets. A lot of the refinances we're doing are cash in refinances, meaning they can't just pay off the principal debt because they don't qualify for a loan at that level anymore.
Hello, Matt. Thanks for coming on with us today.
Hey, Jeff, how are you?
Good, good. Hey, so I recently read an article that you helped co-author on overcoming financing in the commercial real estate market. Tell us about it and who is intended to help.
Sure. Yeah. So the article was kind of focusing on it kind of had a focus on ground up construction and the challenges that a lot of folks have been facing trying to get projects to pencil, trying to get financing for those projects. I think this was more geared towards a less seasoned, not as veteran developer or real estate investor who's kind of struggling to adapt to this new market. It's a lot different today than it was, a year ago or 2 years ago. The really seasoned folks, they have been through a few downturns. They understand it's a very cyclical business. I think they're quicker to adapt. I don't know that those folks would read that article and there would be a light bulb going off moment. But we noticed at my firm, JS Coates, we noticed that we were getting a lot of the same inquiries from folks. And we just decided to sit down as a group, Mike Gerdevoy and Max Cancilla and myself, and just figure out what are the common denominators of advice that we've been giving to people. And so we just kind of put all that together and threw it out there in an article. So, yeah.
So walk us through the article and what were a couple of the key takeaways.
Sure. I think the biggest one is, and we kind of had these bullet points. It was a pretty small article, but I think the biggest one was accepting the new reality of lower levered bank loans and just debt in general. A couple of years ago, we did some of this stuff too. It was like you could get 75, 80% loan to cost financing from a bank. And then you could turn around and put mezz financing behind it and get that up to 85, sometimes 90%. And people were doing that a lot. And today that product just isn't available. And rates have gone way up. It's harder for banks to lend. And so I think the first bullet point in that article was just accept the new reality, and that's important because we had another bullet point about this I think we called it like a bird in the hand. That's important because I would get a call from a client and he's going, hey, my bank's only offering 65% financing, and yeah, I could do it, but I'm looking for 75, 80%. It's like, that doesn't exist today. So you're wasting this valuable time looking for something that's not out there. And by the time you figure that out and circle back to that term sheet that, you didn't want to look at in the first place, that offer is now off the table because rates have gone up again. So it's kind of like if you have something that pencils for your project and you can make it work, we were saying, just take it right now. Don't waste this valuable time looking for this, high levered bank financing that just doesn't exist. The other piece of advice I think that was important is that deposits have never been more valuable with banks and institutional lenders. So, if you have the ability to move your deposits out of bank A and put them in bank B, who's going to offer you this construction loan, that goes a lot further today than it did 2 years ago. Banks are kind of contracting and they've been struggling with their debt to deposit ratio. And so if somebody can come in and deposit a lot of money into that branch, they're going to give you the most competitive terms possible. We would get calls sometimes, from somebody who says, hey, my bank is offering us this. And I'd say, that's a good deal. Take it. You don't want us to go spend 2 or 3 weeks shopping the market, because in that amount of time, rates may go up and the terms will change. So
great. So since the article, anything else you want to add or something you may see coming up in the next 12 months?
Well, so anything that I would add, I would say when I wrote this, there's a lag between when you send it to a magazine or a publication and they actually get it in and publish it. And so there was probably about 5 to 6 weeks from when we wrote that until it got published. And even in that amount of time, the market has changed so much. And so it would be really difficult for me to predict what's going to happen in the next 12 months. But if I were to just kind of regurgitate everything that I've been hearing from different lenders and different economists, and we go to these conferences, there's always these panelists. I think the general consensus is that sellers need to accept this new reality as well, and that there's going to be a pretty broad haircut in value across a lot of assets. A lot of the refinances we're doing are cash in refinances, meaning, they can't just pay off the principal debt because they don't qualify for a loan at that level anymore. And so I guess the thing that I would probably put in now would be if you are a real estate investor, commercial real estate investor, and you do have property and you've got a mortgage that's coming due in about a year, I would start doing some underwriting today and use a conservative rate and figure out if your property debt covers at that loan amount. And debt coverage right now is king. And so if your property doesn't debt service, you're going to have to buy down that principal. And you don't want to be in a situation where your loan matures in 90 days and you're just kind of figuring that out for the first time.
Great. So cash in refinance. I had to tweak my ears a little bit here. I'm sure most people are used to the opposite, the cash out refinance.
Yeah, so going back to those really seasoned investors and borrowers for years, like the last 4 years, those folks have known that there would be some downturn. They understand it's cyclical. And so for years, like 2018 through 2021, I was doing cash out refinances from folks who are saying, I want to build up all my dry powder and I want to have a war chest so that when there is this big value haircut in a downturn, I can go out and acquire some more assets. I don't think we're there yet. There's like this kind of gridlock where prices haven't really gone down yet, but I think everyone has their finger on the trigger for when it happens. So yeah, the cash out refinances were very common for several years, and now cash in refinance is a term that I hear every day.
Yes. Okay. Changing the pages a little bit. So you recently graduated from the UW's Masters in Real Estate Program.
Yeah.
How did you get connected with the program?
I mean, it's the dominant program in the Pacific Northwest. I think anybody who's, people outside of the Pacific Northwest are familiar with the Runstad School, the Runstad program, and the MSRE that UW offers. And so, I went from my undergrad right into working for the firm that I'm at now for JS Coast, and it had always been kind of a goal of mine to get a master's. And so when I moved up here from Santa Barbara, all I would hear about is how great this master's program was in real estate, and I was very excited to do it. And so I just kind of reached a point in my life where I thought, if I don't do it now, I'm never going to go back and do it. So let's just go. So I did the advanced standing, 1 year full-time program, and it was wonderful. It was great. But I don't know that I heard about it from one specific person. Just working in this industry in Seattle, I don't know anyone who doesn't know about that program. So
what was a highlight, an event or a class that you took?
Yeah. So, you were my capstone professor. So that was a great class. And that was probably the most like what I do for work today, which is, that capstone project was all about, let's meet with a prospective borrower developer and let's figure out their project pencils and let's put forth this proposal to them for this potential development site that they have. That was very, very interesting. And I think it covered a lot of different bases. I think the most fun that I had was probably in our negotiation class, which is just, I think that is the thing that most people struggle with. And that was the area where if you watched the improvement from the first kind of mock negotiations people had in the beginning of that quarter till the final one, it was like I could see the most improvement in myself. And so I enjoyed that. And The other class that I really enjoyed was the leadership class. Just having these really well-known, successful, big folks who work in our industry in Seattle that would be difficult to get FaceTime with in any other setting, not people that you can pick up the phone and cold call. But having them come in and explain what they felt like leadership was and how to be successful in a leadership role, I think that was really, really helpful and interesting. So I enjoyed the capstone, the negotiation, and the leadership class.
Good. And that is one of the benefits of the program. When I decided I was looking into it to take it, and I keep telling others that the people in the industry connected with the program are very generous with their time with students while they're there. Once you leave, you will become a competitor, and it's much harder to get FaceTime with those people. So now you're working for JS Coates and Company. Tell us about that firm and your role within it.
Sure. Yeah. So JS Coates Capital, we are, we're mortgage brokers, to put it simply, but we differentiate ourselves from other brokers in Seattle and the Pacific Northwest because we are a life insurance company correspondent. So not a ton of people who, I think the more seasoned folks know about this, but it's not as widely known, but these life insurance companies like MetLife and PGIM, formerly Prudential, huge commercial real estate lenders, but they're not direct. So you could have a net worth of $100 million and pick up the phone and call one of our life company lenders, and they'd say, sorry, you got to work with a correspondent. So we are that correspondent. We've got exclusives with a lot of life companies in Seattle, and really what we do is we try to be a one-stop shop for folks. So half the number of transactions we do are probably through our life companies. The other half are a mix of banks and REITs and debt funds. And we also will place LP equity and GP equity. And we really try and structure what's called the capital stack. And so, a common scenario will be you've got a developer who owns a site. He's got the vision, the plans, the specs, but it's a $70 million budget, and maybe his net worth is 25 million. So he needs somebody that's got a stronger net worth to come and be his partner, and then they need to go take down the loan. So we will find that limited partner or that general partner, and we will kind of build this entity, and then we'll go and find the debt and build the whole capital stack. So those have been more frequent as of late. And now with these cash and refinances, a lot of the stuff we do is bringing in some kind of LP equity to help them buy down that principal balance so that they can refinance their mortgage.
Great. So if people wish to connect with you, what's the best way to do so?
Our website is JS Coates, jscoates.com, COATS, and my email, mattf@jscoates.com, spelled just like it sounds. And I have a LinkedIn. I don't do any other social media because LinkedIn is already enough of a time suck. So I don't do the Instagram or the Facebook thing, but I'm on LinkedIn, and we've got a great team here. We're located over at Caroline Point in Kirkland. So.
Good. We'll put links to all those on here too. And I want to say thanks for coming on and sharing some of your thoughts about this new market as we're talking about in financing for commercial real estate.
Thanks for having me, and it's always a pleasure to see you, and excited to hear about this next cohort of MSRE students. It's a great program. Good.
Well, we'll have you in for maybe as a guest speaker for class next year.
I'd be happy to. That would be great.